Okay, here we've got the Aussie US dollar next. This is fascinating. Those of you that are in the mentoring room this week, we identified the 110, the 110.12 as a point that the market needed to hold, otherwise it would get a sell-off. This is the daily chart, and we've got a strong momentum to create the momentum high at the 110.12. On a revisit of a level like this, it's a point of such reference that above this point we need to see a continuation to the upside. What we actually had here, we traded above the 110.12 once, another move above there the following day, and once we come back to the point, that gives us the opportunity to sell, because the longs will be getting out, and we should see the reaction from that in the market. If this doesn't hold above the 110.12, the reaction will be negative back below it. Okay, it's on receipt of the price action failing to hold above the level, it then, from being a buy point, it then becomes a sell point. So the 110.12 gave us a good opportunity. Yesterday it actually happened in the Tokyo session Thursday night. We had a nice move. We'll see what that looks like on the 200 tick in a second. As far as we're concerned, this is a long above, short below point in this Aussie US dollar. Now, that renders it our structural long and our structural short. So below this level, our bias is to the short side. Above, it is back to the upside. So the same level then, the 110.12, is our structural long and our structural short. Now this will weaken further if we get a short covering rally in the US dollar that I referenced via the dollar index first of all. Okay, so that's straightforward. In this Aussie dollar, this is the key. The 110.12, that's the level we want to be concerned about. I mean, this is, these are historic highs here. Going to the 200 tick then. Here's the. Let me just get the picture for you. This is the picture we saw in the week. Here's the 110. It's the actual, the 110.12 or the 110. I mean, there's not much difference. But the 110.12 is the daily high that gave us that previous momentum high. Once we get to the 200 tick, then we can be more accurate on we can identify a short-term structure then at the 110. This low here, indicated by this ellipse, we trade through. So if you imagine, we've just seen what the daily chart looks like. Here's the 110. This is the momentum high. We trade through with momentum, make a high. We come back and we fail to take out that high, and we stop again. That gives us an opportunity to identify the short point. So as soon as we get back to the 110, that then becomes our short. We have the Tokyo opening range that is either side of the 110. That is an absolute no-brainer. We have to be short out of the range. We have to be short below the 110, and we have the move down to the current price action now. From here then, to the long side, guess what? We have the structural long, as we've seen on the daily, the 110.12. That's going to be, the 110 or the 110.12. It's one of the same thing. We're going to have that as our long point to the 110 here, this original structure. If we trade back through this level, we want to be looking at moves back to the upside. So the 110 then, indicated by the blue line, is the structure and it's the long point. On the short side we are going to have the 109.20. We're accommodating a 3-day high and the last 2 daily lows, and we're still in the UK session here. We're live. Now if this breaks the range, we'll be taking into account 3 other reference points here. So the short point is going to be 109.20. If we go short at the 109.20, we're going to have our stop taking in the 2-day low. So we're going to have our stop at 109.40. Okay, so we're going to have our stop here. So it's a pretty low risk trade. We're going to accommodate 20 pips on the stop. It's just the 2-day low we're taking into account. So if you have the appetite for a wider stop, you could move it up a bit further above these two, above the 1-day low, which should be the 109.80. But that might be a bit rich for a lot of you. So we'll take into account this point, the 2-day low, and we're going to have the stop at 109.40. So the short stop at 109.40. On the long side, if we're going long at the 110, we are going to accommodate the daily low, yesterday's low, in which case, and we can accommodate the 3-day high as well. So we can have our stop at 109.70. So we have the long stop at 109.70. So the long point is the structure as well, which is 110. So it's a structural long, and the short-term long point is the structural long. We have on the long stop, then we have the 109.70, which accommodates these two, the 1-day low and the 3-day high. 109.70. On the short side, the short is the 109.20, indicated by the red line. The short stop is the 109.40. Okay, so that's the Aussie dollar. And again, the moves further down are going to be if we get the short covering rally in the US dollar, and if the concern in the macroeconomic state at the moment persists, then it's going to be bearish for the commodity sector, and that won't do any favors to the Australian dollar, given that is a commodity currency. So if we get a short covering rally in the US dollar and we get the concerns still in the market and the commodities come off, this Aussie US dollar will further decline.